Welcome back to The Gray Report. I'm your host, Spencer Gray, joined by Dr. Matt Bosnakel, Director of Communications and Marketing here at Gray Capital and producer of The Gray Report. Make sure that you are subscribed to the Gray Capital YouTube channel. Follow along. We've got a great newsletter. But first, Matt, wow. CPI print today. Inflation is hot.
Yep.
A little bit hotter than maybe some would like if they're looking for maybe a rate cut in the near future. But we've been expecting CPI to pop from all this tariff talk and price increases. You've been spending the morning kind of digging into the numbers.
It doesn't look
Bring
like
us up to speed.
Yeah, it doesn't look like it's made a huge impact, but it does seem tantalizingly close to an impact, especially considering some of the monthly increases in things like furniture and toys and in some appliances. They've gone up about 1% and sometimes more for some of those categories. And you think, well, maybe it is starting to have an impact. Nothing dramatic though. So inflation went from 2.3 to 2.7. Not a huge big increase, and core inflation core inflation excludes energy and food prices, and that only went up from 2.3 to 2.4. There's still an increase though. We were looking for things to decrease, and it still seems like, at the very end I have a whole bunch of notes, but at the very end of it's the real important part, which is about interest rates and what the Fed's going to do.
Yeah.
Because inflation itself is not the story yet, I don't think. There's no scary numbers in here in this inflation report that would make it news necessarily in and of itself, other than the little tinklings of maybe tariff trouble. But I think that the implication on interest rates is more interesting, I think, really more newsworthy, and I think it makes the Powell say things stay the same. No cuts.
Well, I think that's what a lot of listeners are thinking about when they look at the CPI print of, not necessarily to your point of how more expensive or less expensive are things, but really what kind of signal will that give to the economy and the Federal Reserve when they make a decision whether to keep the Fed funds rate where it is, lower it or increase it even at the next FOMC meeting. Now, this isn't exactly strong evidence to reduce rates, although there's a lot of movement to desire to reduce rates.
So the only thing I would add is first, I got the core inflation wrong. I was thinking of last month inflation went up from 2.3 to 2.4, and then this is another month of increases. It's these continued increases that we got to worry about, and if there's another month or two of these, then I don't see it's not that you can completely think twice about any rate cuts. It's that they get a lot less likely. And
some of this has to be seasonal, though, don't you think? So much more economic activity happens during the kind of the summer months, just like we see leasing activity. Doesn't typically economic activity kind of peak during the summer? And some of this, normalize for seasonality, could be close to a wash. I'm not saying that for 100% certainty, but I think that tracks
it's this balance
with
too. With remember people say that they were pushing forward their purchases because of the tariffs. There's probably different ways to interpret the increase. I think that this recent increase though from 2.3 to 2.7 is noteworthy for as big of a relative jump as it was compared to last month.
And what's driving that increase?
I'm glad that you asked. Food prices are up 3%, which is more than current, so that means it's a little bit pushing those prices up. Beef is up 10.6% year over year, and eggs 27% over the year. But actually, they're down 7%. Eggs are down since last month. So a lot of this that they're looking at, especially with tariffs, are these short-term monthly increases. And so for example, toys are up 1.8% this past month, and furnishings are up 1%. Appliances are up 1.9%. Again, all in 1 month. And if you expand that month,
so that's a monthly increase, not an annual.
Not an annual increase. Yeah, these monthly increases are looking like annual increases. It's so big. That's how big they are. And
so toys.
That could be. Yeah, it's one less doll. Maybe only one doll.
Well, isn't that what Trump said? He'd be like, maybe only have one Barbie.
Yeah. So, but
one doll.
I don't, again, some of this is pretty volatile, and some of the monthly changes, it can come back down again. I'm not sure if there's a glaring signal because those are just cherry picked. Most of the items are doing fine, and the jump isn't horribly big. Even the monthly increase was like 0.3 instead of 0.2 last month. So it's not like, here, let me actually check and see on the detailed summary. So last month it went from a 0.1 increase to a 0.3 increase, but still 0.3, that's not
three
huge.
Times, Matt. That's 3 times.
I know. Well,
last month.
that's a good point. So maybe people should get worried. I don't think it's at an absolute level at this moment that you should really be scared or anything like that. If anything, I think that we should look to those categories that maybe have room to fall. And one of them I would say is shelter, which got some coverage in some other news sources, and we're going to talk a little bit more about housing prices and how the home sale market is changing and stuff. But for CPI, shelter went down from 3.9 to 3.8 year-over-year increase. That's includes rent and home sales. Just rent of primary resident went down from 3.81 to 3.76. It's still within a rounding, so you could still say that it's 3.8. It's the same, but it still went down if you dig right down like past the significant figures of what they're showing here. You spoke about the difference yesterday or last week between the rent growth data from Yardi Matrix, CoStar, and RealPage. You were disparaging CPI and saying maybe there's an ulterior motive hidden.
I didn't say. I'm just saying that. No. What I asked Matt, or what I said, I didn't say that there was an ulterior motive. I'm saying what I was saying is that what is the relevance and what when we look at shelter is a component of CPI. What actually is it telling us, and is it telling us anything useful? And if it is a metric that there's not a lot of utility, and if one had the option to have CPI be higher or lower, and that impacts the decisions of the Federal Reserve, I'm not trying to be too much of a conspiracy theorist. My point was that it moves the needle in major decisions affecting the entire macroeconomy. Like it's a pretty big deal. And we're looking at a metric. We're like, we don't even know if the metric is like a real metric, and it's such a big driver because what we're seeing, day to day, the reality of what's happening in terms of rent growth, looking at all of these higher frequency, rent trackers. It's not lining up with what CPI is printing. We're making all these decisions based off CPI. And so my question is, what's the real utility of CPI? And where the heck are they getting their numbers from? What's the methodology? Because if it's just a black box, which it's not a black box, it's got a bunch of people working really hard in an office somewhere doing a survey and doing some math. Thank you for your time. That's what I was getting at.
Oh no, I understand, and the differences are confounding a little bit because here, just throw this up. Please. So I put rent growth, which is rent of primary residence. That's the category in CPI that I'm using for this CPI rent growth. And then I took the CoStar numbers, which are the CoStar is in gray on this chart here, and the CPI is in I think it's dark blue. And if you look at the peak, then you'll see that it's about a year apart. So I think it's January for the CoStar one of 2021, and then January 2022 or 2023, I forget. Either way, a year apart of the peak, but the trough is like 2.5 years apart. It's basically over 2 times slower coming off of the peak. This is CPI rent than it did spike up. So it spiked up very closely in line. So I'm talking about CPI trends versus the CoStar trends. So first of all, the first thing about it is CPI lags. But the second thing about it is the hill is a little bit it's a little more rounded. It's not as steep. But I think most importantly is the biggest difference between CPI and the private rent growth trackers that we've seen is coming off of the peak has been a lot shallower, has been just like a shallow slant instead of like the sharp come down that we had in about a year from CoStar. The rents shot down so quickly, but it hasn't done that yet. And I think there's even more room to fall, I would argue. It's just not.
And I think that's where we were getting at yesterday is that we know, I mean, looking at these CoStar rents, rents spiked and then they kind of came back back down to earth, at least in terms of like growth rates. But CPI, which we're talking about rate of growth, we're not talking about we're not talking about nominal numbers. We're talking about rate of growth. And the rate of growth that has never receded to normal levels. And so if you're growing at a higher rate of growth, you're compounding off of those previous numbers, and so it's just not giving a realistic picture of what people are actually paying. And again, unless I'm missing something, which I
think that part of it's the way it's calculated, obviously, and I think that maybe it's renewals. And there is like what CoStar measures. I don't know how much affordable housing they're measuring in their rent growth. So it's a whole different category, and it's a big part of it. So,
so I guess what I don't get is they got the uptake pretty good, the slope up, a little bit of a lesson angle. It's obviously significantly delayed, but they got the general slope of the increase somewhat close, and the level. But what they're missing is the decompression, where in reality rents decompress relatively quickly. But according to CPI, there was this like long drag that we're still going through. But we know in reality, it's not like all rents just, especially the rate of growth stop kind of right away. So where is this is it just a delayed function of gathering the information? But if that was the case, wouldn't the slope of the growth also be similar, kind of delayed in a sense? And it is delayed, but I guess the angle of slope would be somewhat similar.
Yeah, it is a little bit of a mystery, but I keep thinking like, well, we are talking about some affordability issues, and if this represents the level of continued housing costs, then that's like a valid concern for people, and that could lead to people feeling like prices were inflated. I do think that rent growth, as measured by CPI, has further to go. Right now, it is at the normal levels, whatever normal was pre-pandemic, which is close to 4%, a little bit under 4%. That's where it just crossed that threshold of 4%, and I think there's got to be a little bit of an overreaction before it returns to those levels. Just like right now, in CoStar, we are currently in a period where it's about 2%, lower than pre-pandemic norms. Well, we've just got back to pre-pandemic norms for CPI rents. I think it's got maybe 1% to drop, maybe more. I don't know. It definitely does seem like it's going to be shallower than the drop in CoStar and other trackers from CPI.
I just wondered the methodology, if we've updated our methodologies appropriately for measuring some of this stuff. With just the extremes that took place during the pandemic. Are we using the right models?
Well, I think I was thinking about this too. It's like you're limited to the tools that you have, and I was like, well, they should just call everyone every month. And but RealPage and CoStar and other so CoStar maybe through apartments.com, but RealPage through property management software, whether they're listing them like kind of apartments.com does, or they're helping the property management like Yardi Matrix or RealPage does, they have data sources that are constantly feeding them in and they're learning from each other. But I don't know if the government is allowed to do that. I wonder if there's room for public-private partnership at this point. That's what I'm thinking, is they need to have like a round table of these data sources and come to some kind of accord that's like, all right, we're going to get better data, and it'll be from there. It won't be just one source, so RealPage can't skew it, but yeah, that'd be fun.
If you think that if the BLS didn't produce, CPI reports and updates, do you think the economy would keep going? Would we?
If a tree falls in the forest and an economist can't convert that to lumber figures and supply, then it never really fell.
But I'm saying, would there not be economists without the BLS? Would people? I mean, I guess Jay Parsons, all these people that are doing economics, people in universities with do they not do work? Yeah. I'm saying, my point is, like, there's other sources of data out there. There's even better sources of data.
And we're relying on analytics and stuff, and
and there's like competing sources that like you have to have good data to theoretically you need to have producing good data consistently to be able to have customers that want to buy your data or use your data to be trusted, versus we've got the BLS. It's just, one source of data that's putting it all out there, but we're kind of questioning the validity of the sources. And then a pandemic happens, they stop working for a year, and then we have a gap in data.
I was thinking like maybe the government knows a little bit more about us than we think. It's just scratching the surface, but they should share it more. And that would be the drawback from my personal position is if we didn't have access to this, or if this information didn't exist, these updates from the government. And I think this is relevant.
Don't you think there's like a really good incentive for the market, the private sector to produce this type of information and
data? They would produce it, but you'd have to subscribe. And,
maybe.
But I think that this is irrelevant because this is in the news. And part of there were some rumblings like, oh, are they going to take away the Fred website functionality or some other? And I've noticed Fannie and Freddie don't do their research articles like they do anymore. Like they used to have Fannie Mae used to have a lengthy research report. Now I'm not saying they're not government connected, but they're quasi kind of. I think that someone's tightening the belts in there, and there just isn't as much free information that I like. Makes my job a lot easier rather than having to go to.
Is that something you've seen? Has Fannie and Freddie they've really reduced the amount of publications?
They went from monthly research reports, and like Fannie Mae had a monthly multifamily and economy, like housing and economy rundown with nice graphs, and they would have a special topic every month. I look forward to it. And now it's gone. Now it's just like simple data table.
If you go in is it very clear, like, changing in administration, changes of administration, like you saw the difference between?
Well, it's correlation. It's not causation. I don't know. Well, but it does seem like they're tightening the belt. You don't need to do this. It's and then they're gone. Yeah.
Well, that's an interesting story just in itself.
Yeah. So just to put a pin in this discussion, I did want to know, Jay Parsons also had an article on CPI and rent growth. That was where the beeping was coming from.
That's on LinkedIn. People sending you messages.
Yeah. So I just wanted to skip straight to his takeaway. He says you can use this as evidence that stalled out home buyer market is not putting upward pressure on rent inflation. So just so people aren't really pouring away from the home buying market into the rental market. However, I think it is it is a little bit complicated. I think that there remains to be seen the specific effect of high home prices, the effect of overly high home prices on rental demand. I haven't read a report on that. I'd love to like hash things out with John, our data scientist, and see if we can find some kind of correlation. But short of some companies that have a survey that you fill out that's like, why are you moving out? Is it to buy a home? I haven't seen any data on like, all right, when the home prices increase at this level relative to rents that increase at this level, you're going to see a lot of more demand here or something. I really am calling on, I'll just have to do it myself. I think that's going to have to happen. But
yeah, but I get it. It's how much household formation is there going on? And that's going to be a much more the primary driver rather than, it's a better time to buy versus it's a better time to rent. And so, but at some point, there's enough single-family buyers that turn into renters that do move the needle somewhat in some markets.
Yeah. Well, I mean, the median age of a home buyer is steadily rising, and that does imply that fewer people are buying homes. It's a broader demographic shift. It's
I don't know where else they're going or what are they doing.
Yeah, they're getting roommates, or they living with their family maybe, or they're renting instead of buying a home. But just to kind of return to CPI, I think there's a lot of relevant shelter movements in shelter inflation, and I think that's going to be interesting to track. But most importantly is how this would impact the Fed's decision. I think that's going to have an immediate impact on whether whether it's a home mortgage or whether you're in the apartment investment industry and you want to get a good rate so you can finally do a deal. It's going to have a big impact, and it's discouraging to see. It's like you would have to look for reasons to cut now, and this is one less reason. So I'm bummed.
Yeah. There's still a lot of pressure, to cut rates, whether it's now or later this year. I think the idea that, maybe that neutral rate, is just a little bit lower than where it was when the current,
Yeah.
Fed funds rates were put in place. And we need to adjust for, again, just kind of where the neutral rate is.
Yeah.
But, where that kind of our star is always up for debate a little bit. So
Yeah.
it's relatively subjective.